Everyone, what's going on? And welcome to another day navigating these markets during a war. We did have some very interesting price action today, a lot of back and forth. In fact, I'll go ahead and start this video off with yields, especially that short end of the curve. Basically, today was a big question mark in the sense of, is there going to be a resolution in the Middle East, or is there going to be an escalation? I'll go ahead and break that down here. I'm going to go down into the 1 hour time frame, and I'm going to go ahead and illustrate essentially what went and happened. So this morning, or early last night, Sunday, trading up into the morning, we did see yields go ahead and just trade higher. And at one point, the short end of the curve, that 2-year yield, did go ahead and reach 4%. Now, early morning, as the markets were getting ready to go ahead and open up, you did have a tweet from President Donald Trump essentially saying that he was going to go ahead and end the war within 5 days, essentially going back on his 48-hour ultimatum that he gave Iran. For those that don't know, he's basically said Iran has 48 hours to go ahead and open the Strait of Hormuz, or the US is going to go ahead and obliterate them. So basically, from my personal opinion, there's a lot of parallels from what happened in April when there was that initial tariff shock there. The bond market scared the president, right? Yields were rising, equity markets were hurting. You can always think of the stock markets, especially for this administration, as a report card of their performance, right? And so they don't want to see that happening, especially with midterms coming around. So in my personal opinion, I think that, whoever was on Trump's camp, maybe Scott Bessent, was going like, hey man, yields are rising. There could be a lot of complications if you start to see oil stay elevated for a long period of time, not just domestically, but your friends, right? NATO, all these other developed countries will start to hurt as well. I'll go ahead and show you this picture here, or not this picture, this chart rather. You did see this is the 2-year yields. You have the Aussie, the US, the Kiwi, Canadian, Eurozone, and Japan, right? For some time, you were seeing a slight drift here, or stabilization in yields. In fact, let me go ahead and move this here to this way. You can see that, you were having some kind of a drift downward here. You can see the Aussie yields here, the US yields were coming down. This is Kiwi, Canadian and Eurozone. And then right here, March 2nd, which I put this line here. I know it was the weekend, that Saturday, but March 2nd, right where those markets started opening, you can see that yields actually started going in the opposite direction, drifting higher. That is because elevated oil prices raises those prospects of global inflation. And so the way countries go ahead and attack that inflation is by hiking interest rates. And so you're having like this global rate hike narrative. It's been getting priced in here. And so markets are pretty much preparing for worst case scenario. And so you were seeing like the stock market here. If we go back to this chart and you go to the stock market here on the daily time frame, you're starting to see some bearish market characteristics. You see the stock market here is starting to trend down lower here. This 200-day moving average in yellow here, we initially traded into that level, found some support, buyers took it up higher, but we've really had lack of follow through. So now you're seeing this structure here to the downside. Now you are consistently seeing, the stock market here trading below that 200-day moving average. If I go into the 4-hour time frame here, and this 200-day moving average is going to be static no matter what time frame I'm in, you can see here that the market actually has been staying below it. You see that you had this brief level of support, once, twice, and then we traded in here, we tested it, and now we're staying below here. So, from a technical perspective, if we look at this from a technical analyst here, if you start to see the stock market here staying pressured under that 200-day moving average, and you see, oil elevated, yields somewhat elevated, then I do think that this market can potentially roll over into that 6,200 level of support, and then beyond that. Same thing with the NASDAQ as well, doing that same thing. You found some support here at that 200-day, you bounced up, and now you are starting to see, like maybe you start to see, as time develops, as you get more candles forming, you can see this 200-day and 50-day moving average start to cross over. That would be very bearish as far as technical structure goes. And then that level to the downside where you can find some support will be somewhere around that 22,100 level. So I'll continue to monitor the position here. I did have this level marked up here, this current range that we're in. So right now we were seeing some indecision when it comes to oil. This is the 4-hour time frame, trading between that 92 handle and that 101 handle. You're kind of just range bound there. And in my personal opinion, anything above this level right here, the support or resistance would have been escalatory, if that's even a word, and everything below this would have been de-escalatory. So at the moment, we are seeing, price action below that. We'll go ahead and see how that develops. From a humanitarian standpoint, if you start to see oil go ahead and trade up into this level and start to trade downwards, then perhaps markets are expecting some kind of a resolution there, and in that case, you will see the dollar go ahead and dip lower, yields dip lower as central banks are now getting ready to essentially get away from that hawkish stance that they were once in, and maybe you see the stock market actually start to get elevated there as well. So that's something I'm looking for. First, as far as currency's direction, what I usually trade, I'm looking at the price of oil. I'm looking at yields as well, specifically the U.S. 2-year yield, mostly because it is driven by the dollar, or not dollar, but it influences the dollar, which the dollar is getting the safe haven bid right now. So a lot of the price action directionist that you're seeing in forex is driven by the U.S. dollar here. And let's go ahead and talk about the US dollar. So you did have this level of support here. It seems like we are trading below it, and there's a good possible chance if you do get resolution that you actually see some dollar to the downside, whether it looks like a break up to right here, a test, and you trade back lower, or you just start to drift here lower altogether. That is also a possibility, something that I'm going to be mindful of. And currently right now, the way I'm positioned is actually dollar upside. My trades here are not doing so hot. In fact, you have the euro dollar here in deep drawdown, and the Kiwi dollar as well in drawdown. So all of those trades are in fact not looking good for me. I'm down about $2,000 right now. So just to be transparent, I'll go ahead and show that on the screen here as well. You can see that right there, $24.90. So just for transparent purposes. So right now the trades are in drawdown. However, let me go ahead and break down the current scenarios, because I think it's very important that you not only have expectations when you're in the trade, but you also have expectations for what happens if you're wrong, what happens if you're right, what happens moving forward on the next trade. So what I'm looking at is, if you get a de-escalation in the world, then most likely than not, you do get dollar go ahead and drift lower. And in that case, the euro dollar will actually go ahead and drift higher. Maybe you trade into this 200-day moving average here where I have my stop loss, or you trade above into this 1800 level here. And in that case, I think I'm still looking to go ahead and short the euro. Reason being, you have the underlying fundamental drivers in favor of the dollar, right? So although you are seeing, or although you may see some pressure into the dollar as that safe haven bid gets repriced out of the dollar, I still think longer term, looking out a couple months from now, I think that euro dollar is to the downside. You can see that the economic growth is not in favor for the euro, inflation data is not in favor for the euro, institutional activity is not in favor for the euro, and the technical structure, of course, is not in favor for the euro. And you've been seeing this score pretty consistently for a very long time here. Going back all the way into February 21st, you did have that brief area where it was neutral, but moving past that, you can see that the overall score has been somewhat bearish. So I like to see that. One thing about the euro specifically that I've been really struggling with is growth. You can see that their growth is actually not that good here. And if you look at GDP growth forecast for the euro, we'll go ahead and toggle this here for euro only. You can see that it's actually not that good, right? So you see, and it's looking to, their projections for Q4 of 2026 is actually looking to get worse. One other thing, if you start to see oil prices elevated for too long, let's say you don't get the de-escalation and you get an escalation or a prolonged conflict, then a lot of countries are looking to go ahead and hike rates. Now, you would think, well, if the Eurozone, or the ECB that is looking to hike rates, at the moment, markets are pricing in around 2 to 3 rate hikes there. That's actually not necessarily good for the Eurozone. The reason being is that they are currently struggling with growth. And so if you add higher interest rates already to an economy that is struggling with growth, that actually pressures growth even more. And that's why I think you can see some downward pressure into the euro. So basically what I'm trying to get at here is, if you get a de-escalation, then you can probably see the price of the euro go ahead and go higher there. And then at that point, you go ahead and just look for a re-entry opportunity, or I will look for a re-entry opportunity to the downside. Or if it doesn't de-escalate and it escalates even further, then this trade will eventually start to drift here lower, and then I'll just trail my stops here as it goes. And I'm ultimately looking to target somewhere around this 1.1400 level or below if we break that level of support. For the Kiwi, very similar situation here. It's getting a very bearish reading here on the edge finder. You can see the Kiwi dollar here, it's getting a -10 reading. And in fact, over the period of time here since March 9th, during that conflict here, the score has gotten progressively worse here to the downside here. I don't know if you can see that in yellow. Right now, we're getting a -10 reading for the Kiwi dollar. same similar situation. If there's a de-escalation, you'll probably get a slight pop in the Kiwi, but ultimately looking to go ahead and fade it. And if things escalate for or stay prolonged here, then this thing will start to go ahead and drift in my favor. And again, I'll trail stops and just continue forward. Another thing that I'm looking to do, Aussie dollar here, the basket as a whole has been trading lower. I love to see that. I got out of this trade for a profit here, and so now we're getting back to those prices where I entered originally. If I can actually get a discount into the Aussie dollar, I would really like an opportunity to go ahead and pick that up to the upside. The way I would go ahead and do that is go buy Aussie dollar long. I will go buy Aussie CAD, Aussie Swiss. We're getting some pullback opportunities across the whole Aussie basket. I actually like Aussie New Zealand here. I looked at it during the live stream here. Someone was mentioning that Aussie Kiwi, why did you not go ahead and participate when you first went long the Aussie basket? And the reason why was because you were getting no pullback opportunities at the time when I entered. Price was already very much elevated, and so I did not want to go ahead and chase price to the upside, and so I'm very glad I did that. Now you're starting to see a pullback into the Aussie Kiwi, and so from a technical perspective, the way I would go ahead and enter that market is if you go ahead and test this 50-day moving average here in red at that 1.1800 level. I think that's a solid level to go ahead and go long the Aussie basket, given a very specific scenario. Of course, if you get some risk on appetite, the dollar starts to fade off a little bit, then I think that will be a very good trade to go ahead and participate with. I still like Aussie CAD, Aussie Swiss, the Aussie Swiss basket, same thing. It's starting to pull back now. The Swiss basket as a whole has been getting weakened. In fact, if I go ahead and look at the edge finder here and look at the overall basket of currencies, I'll go ahead and show you that real quick here. Macro scanners equals a price index. You can see that the Swiss basket as a whole is pretty weak here. So you can see that at 33%, getting the almost the second lowest reading here compared to everyone else. You can see that here illustrated here on the right hand side. You see the CHF here, second to lowest reading. So I love that. Another thing, if you do get a de-escalation, then you will probably see the Canadian dollar go ahead and weaken, and that's why I do like that Aussie CAD long. Remember that the Canadian dollar is somewhat correlated to the price of oil. If oil does well, the Canadian dollar does well, and if oil does bad, the Canadian dollar will go ahead and flop. So if you do get that de-escalation in the Middle East, then the Canadian dollar I do expect to go ahead and weaken, and so the Aussie dollar being already suffering from elevated inflation and an RBA that is looking to hike rates, I think that that is a very strong relationship where you're trading a potentially very strong currency against a very weak currency. So that's why I like that to the upside here. I'm looking to go ahead and see what happens once we get to this 50-day moving average here, right around that 9,600 level. So we'll go ahead and see. I'll put an alert on my chart, and I will definitely go ahead and update you guys on my thoughts on the Aussie basket. But for now, I'm going to stick with my current positions here. Euro dollar short, Kiwi dollar short until something changes. Again, we've been going back and forth lately today, especially early in the morning, where you had the president saying that this war is going to be over by the week's end, basically backpedaling his initial ultimatum of 48-hour notice to Iran, and then Iran shortly after in the afternoon went ahead and said, hey, we've had no open communications with anyone. They've reached out to us, but we have not responded. And so that's why the markets are trading a little bit back and forth today. And so right now I'm just basically using yields, the price of oil, for directional bias, because ultimately the story will be reflected via the price action. So that's going to be my daily recap here for today. Thank you guys so much for watching. I truly appreciate it. If you have any thoughts, questions, or anything like that, leave that into the comment section below. And like always, trade safely. Have a blessed rest of your day, guys. Bye-bye.